That's a great question. We have, to me, that it looks sustainable if you look at the German two-year rate. Quite a significant reaction there, and looking at that as well as a number of other things, especially the long end of the U.S. yield curve. And I think it's curious here to see the reaction to the Fed, which was quite hawkish, but the dollar not getting much from that. Now we have a more hawkish than expected ECB. Do we get much from that? I think the answer will be in what happens to risk sentiment and the longer end of the yield curve. It seems like every time we get these hawkish surprises, it just pushes up the front end a little bit more. Hardly anything happening at the longer end of the yield curve. And I think that's what would be the game changer. If they say, look, we've hiked rates a lot, we're pretty much into pause mode. And if the inflation continues to come, I think the directional adjustments from the ECB are pointing that way too. If the inflation continues to come, they may not necessarily continue to hike rates if that long end will do some of the tightening on the economy for them. It's just not been doing so so far. And then, so in other words, if we see the long end yields coming up and coming up aggressively, I suspect that's going to be bad for risk sentiment and could actually support the dollar and maybe cap the euro's potential here. And then for the euro to turn higher, we're need to see better economic outcomes for Europe, which we're not seeing. The data's been surprising pretty negatively lately. Biggest question of all is the Bank of Japan tonight, but I don't know if you want to go there.
Yeah, I mean, we'll pretty much touch on that, but let's remain a little bit zoned in on the Eurozone at this time. I mean, they'll keep moving forward as the bank still sits behind the curve, is pretty much what Christine Lagarde had said before today. How far behind the curve do you think they are when it comes to these interest rate hikes? Is it one more?
Well, it's one more for now, but I think they're wise to depend on to have the data dependency message so clearly in the Fed's very odd pause with maybe 50 more basis points. The central banks simply are not in control. They're just reacting to the unfolding reality. So, yes, they can surprise in the immediate sort of aftermath of a meeting with some sense of determination, but then we immediately shift the focus over towards incoming data. And that just means that the volatility around these data releases, I think, will remain quite high, whether it's inflation, whether it's activity surveys, just about anything. For example, today's menu of U.S. data in the case of the Fed. So that's a situation we're continuing to see for this cycle. Central banks are reactive, not showing forward guidance or able to have any visibility or really affect the policy lens or the policy expectations beyond the next meeting.
Yeah, so certainly no urgency then perhaps in having to put forward those hikes. I mean, even the next meeting in July, I mean, that doesn't necessarily mean that they definitely have to hike, right? I mean, we saw inflation actually drop off to that 6.1% figure from 7% then. And even though they expect a marginally higher inflation outlook for the year, it doesn't necessarily mean that things won't head lower this time around next month.
Yeah, but I just think it's too early for them to lay off. I think certainly July looks like it should be a live meeting for a rate hike. If we're getting some really huge decelerations in some of the key figures, inflation, core inflation especially, potentially that puts a question mark around September. So I think it's appropriate for them to stay on path. That's what the market is expecting. And then the next round or two of data will probably help us see what September will bring.
How is the ECB able to maintain credibility in a time when they say they're looking for pause territory in some instance, of course? I mean, not necessarily saying it outright, but then having to realize that CPI is still fairly high. So they kind of have to backtrack on a lot of their statements.
As long as it's about trajectory as much as it is levels. So we have turned the corner, at least initially here, for the core inflation. Of course, the headline turned further back. As long as the trajectory is correct, they can have some level of credibility here. It's, of course, if we get a problem with inflation levels sticky at the core, flattening out, and then, of course, if they begin to rise again, then you're starting to have to fight on the credibility front once again. So it's as much trajectory as levels, I would argue, on that front.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.